The broadcast is now starting. All attendees are in listen-only mode.
You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, 30th day of July, 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first one is our live training room, and that's reserved for members only and those who are taking their 1-week free trial. If you have not yet taken your 1-week free trial, when Michael joins us about 50 minutes from now, give or take, he'll walk you through step by step how to take the trial. It's very simple. No credit card required. And when you take the trial, you're not just getting access to the live training room, but for 5 consecutive trading days, we're going to treat you just like a passport holder. You're going to have access to every single resource you see on the screen. Now, we foot the bill so you have a clear head, because at the end of the 5 days, we want you to be able to make a well-informed and intelligent decision as to whether or not trading is right for you. When the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and come back for the afternoon broadcast, this broadcast. Now, this broadcast, unlike the morning broadcast, is open to the public. That's everybody, everywhere, on planet Earth, with an internet-connected device. There's 2 different ways you can join this afternoon broadcast live. The best way I'll give to you first. Go to mytradingiq.com. Scroll down to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward every trading day, you'll get an email about an hour before this broadcast starts. In the email, there will be a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. Benefit there is you'll have access to the question box so that you can ask questions and participate in the discussion. Of course, there will be days you're out of the office, away from the desktop, but you still want to join live. And there'll be days when you're busy, you can't join live, but you want to get caught up later. You can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting if you will, but we also archive each and every daily broadcast. Currently, there's over 2,600 daily episodes archived for your educational and viewing pleasure. If you're new to the world of CFRN, it's a great way to get to know who we really are. Not just today, not just this week. Thanks to the power of YouTube, you can see how we've evolved over the years. You can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all. So just pick some days at random. Watch a little bit, fast forward a little bit, watch a little bit. Pick another day, week, month, year. Do the same thing. Obviously, the more recent episodes are going to be more relevant as to what's happening in the markets right now and in the world. youtube.com/CFRN. Our daily schedule each and every day for the afternoon broadcast is our daily devotional, word of prayer, then some market news. Then I get into a recap of the alerts. And when Michael joins us around 12:50, he'll give us a recap of what happened this morning in the live training room. And when he's finished with that, we'll do some live trading on the TradingView platform, about 30 minutes. Then I'll come back. I'll finish the recap of the alerts if I have not already. And then we'll wrap things up with our good word for the day. So let's get after it. We started a new devotional topic yesterday, the armor of God. Today's verse, Ephesians 6, verses 13 through 18. I'm going to share it with you from the Message translation. Be prepared. You're up against far more than you can handle on your own. Take all the help you can get, every weapon God has issued, so that when it's all over but the shouting, you'll still be on your feet. Truth, righteousness, peace, faith, and salvation are more than words. Learn how to apply them. You'll need them throughout your life. God's word is an indispensable weapon. In the same way, prayer is essential in this ongoing warfare. Pray hard and long. Pray for your brothers and sisters. Keep your eyes open. Keep each other's spirits up so that no one falls behind or drops out. Today we're going to talk about the breastplate of righteousness. In the tumultuous landscape of spiritual warfare, the armor of God is a divine fortification, crucial for safeguarding believers against unseen adversaries, emphasizing the imperative of spiritual protection. The breastplate of righteousness emerges as a vital component, guarding the heart from the onslaught of malevolent forces. Malevolent. Ephesians 6:14 establishes the foundation for the breastplate of righteousness, urging believers to keep this protective covering tightly in place. The scripture introduces the concept of righteousness not merely as an ethical principle, but as a defensive shield against spiritual assaults. Now here's the symbolic meaning. The breastplate, worn over the chest, symbolizes more than just a piece of armor. It represents righteousness as a shield that guards the heart, the seat of emotions and spiritual vitality. This symbolism emphasizes the inseparable connection between righteousness and moral integrity, underscoring the need for believers to clothe themselves in virtuous living. So, let's try to get an understanding of the physical armor. In ancient times, a breastplate was crucial to a soldier's armor. Crafted from durable materials such as bronze or iron, it covered the torso, protecting vital organs during battle. Similarly, spiritually speaking, breastplate of righteousness shields believers from the assaults that can penetrate the core of their faith and moral standing. So let's now talk about practical application in daily life. In a world of challenges, embracing righteousness involves making choices that align with God's moral standards. It encompasses honesty, integrity, and a commitment to virtuous living, even in the face of societal pressures. Breastplate of righteousness not only guards against spiritual attacks, but also profoundly impacts personal well-being. Righteous choices contribute to a clear conscience, inner peace, and a sense of purpose, fostering emotional and spiritual resilience in the face of life's trials. Now, the New Testament offers cautionary tales of individuals who, at times, fail to uphold the breastplate of righteousness. Peter's denial is an example from Matthew 26. In the courtyard, Peter denied knowing Jesus out of fear, momentarily abandoning his professed righteousness. 2 Timothy 4:10, Demas's love for the world is apparent. Once a fellow worker with Paul, Demas deserted him, succumbing to worldly allurements and compromising his righteous stance. And then we've got Judas and the ultimate betrayal, also in Matthew 26. Judas, entrusted with a position of great responsibility among the disciples, succumbs to greed and deceit. His actions ultimately lead to the arrest and crucifixion of Jesus. The consequences of Judas' betrayal are profound, showcasing the devastating impact of failing to uphold righteousness, especially in a position of trust and leadership. In case you don't know, out of all the disciples, Judas was the treasurer. He carried the money bag. In conclusion, the breastplate of righteousness serves as an indispensable shield, safeguarding believers from spiritual attacks and influencing their well-being through their choices. By understanding its symbolic depth, drawing lessons from New Testament examples, and applying its principles in daily life, believers can fortify their spiritual defenses and navigate the challenges of a fallen world with resilience and integrity. Join me in a word of prayer. Heavenly Father, come before you today, seeking your guidance and protection. As we put on the breastplate of righteousness, may we be covered in your righteousness and purity. Guard our hearts from all that is evil and wrong, and help us to live in a way that honors and glorifies you. Strengthen us to stand firm in our faith, and let your righteousness shine through us in all we do. May we be examples of your love and grace to those around us. It's in Jesus' name we believe and pray. And everybody said, amen. Amen, and happy Tuesday. Let me give you the numbers from around the world. Start here in the U.S. with the cash markets, or the indices as they're called. Bring in fresh data. Go. The Dow currently up 50 points. The NASDAQ down 228 points, which is well over 1.25%. S&P 500 is down 38 points. The Russell 2000 basically unchanged on the session. It's positive, but less than a point. In the commodity basket, crude oil down $1.14, trading 74.67 last. That's a drop of 1.5%. Gold is up $5.10, trading 23.8290 last. Silver up 27 cents, trading 28.13 last. That's a gain of almost 1% for silver. In the Asian markets at the close, the Nikkei gained 57 points. Shanghai dropped 12. The Hang Seng fell 235, which is almost 1.5%. And in the European markets at the close, FTSE down 17, the DAX up 90, the CAC up 31. No movers, no shakers there. So we had a mixed day in Asia. It was a mixed day for the UK. And at the moment, it is a mixed Radio Tuesday here in the US of A. Those divided markets. Now, the Dow is barely in the green. The other three indices, the Russell has now gone into the red, less than a point. So I've got a feeling the Dow is going to probably follow the other three indices to the downside. But we'll be going to the charts here in just a little bit, and we'll see what's happening and why. We had news this morning, and again, as I mentioned yesterday, this is probably, in fact, the article I shared with you, they called it the busiest news season, news week of the summer. We got the jolt this morning. Job openings declined slightly in June from the month prior, amid signs of cooling in the labor market. New data from the Bureau of Labor Statistics showed that 8.18 million jobs were open at the end of June, a decrease from the 8.23 million job openings in May. May's figure was revised higher from the 8.14 million open jobs initially reported. Economists surveyed by Bloomberg had expected the report to show 8 million openings in June. Now, the JOLTS survey, that stands for Job Openings and Labor Turnover Survey, also showed 5.3 million hires were made during the month, a slight decrease from May's revised figure of 5.7 million. The hiring rate declined to 3.4% from 3.6% in May. Also, in today's report, the quits rate, a sign of confidence among workers, sat at 2.1% for the second straight month. In June, there were 3.28 million quits, down from 3.4 million in May, and the lowest number of quits in a month since November of 2020. 4 years. It's getting tough out there. All those job openings created by the pandemic have been filled. U.S. stocks fell today, led by a drop in shares of AI chip heavyweight NVIDIA, as investors await key earnings from the likes of Microsoft and AMD. Stocks are in the midst of a potentially pivotal week featuring the Fed's decision tomorrow, the July jobs report, and results from 4 of the Magnificent 7 megacaps. All will be crucial for investors wondering whether the recent stock pullback is over, as they weigh high expectations for interest rate cuts against concerns that big techs have lost their mojo. Yesterday, we talked about all those regional banks buying those long bonds, praying that the Fed does cut the rate in September. Because if they don't, those banks made a bad bet and they're going under. It's also bleeding over into not just the regional banks, but the national banks. In fact, Warren Buffett sold $2.5 billion of Bank of America shares yesterday. So if you're a Warren follower, well, that writing's on the wall. And where are we at on the national debt? We just surpassed another milestone, $35 trillion. In recent days, our debt has risen, well, actually since January, our debt has risen by $1 trillion, pushing us now to $35 trillion. Mounting by nearly $5 billion every day so far this year. This latest barrier was formally pierced last Friday. That's when a daily Treasury Department tabulation, which was then compiled and released late yesterday, showed a gross debt level of over $35 trillion. Elon Musk, in a post on X, had this to say. This is crazy. End of post. America's red ink has now jumped by more than 75% during the last 8 years. And yet the issue has been relegated to the back burner during the 2024 campaign season. Not only that, deficit hawks warn it's often been pushed aside in favor of ideas that would increase debt even further. borrowing just keeps marching along, reckless and unyielding. That's from the president of the Committee for a Responsible Federal Budget. Despite all the risk and warning signs, she added, these alarm bells seem to be falling on deaf ears. Of course they are. Jerome can just turn on that printer. U.S. stocks could drop between 10 and 13% this year, dragged down by a sell-off in 7 mega-cap stocks that previously pushed broader markets to record highs. That's from Morgan Stanley. The market valuations on a standalone basis look extended. Therefore, an annual drawdown or correction of 10 to 13% is very possible. Now, the Magnificent Seven are Microsoft, Apple, Alphabet, Amazon, Nvidia, Meta, and Tesla. We will begin to see the convergence between the rest of the market and the Mega 7, and that's going to continue. According to an analyst who manages 1.5 trillion in assets over MSIM. We've been talking about this house of cards for a very long time. You know, sometimes you hate to be right. Procter & Gamble CEO John Moeller is seeing a more discerning U.S. shopper, but not one completely closing their wallets. That's because the banks are raising their credit limit on their cards. I don't doubt that some shoppers are more cautious. That would make sense, Moeller told Yahoo Finance. Moeller says the volume of private label goods sold compared to P&G brands is unchanged, a proxy he uses to gauge consumers trading down due to economic reasons. Unit volumes in the U.S. have also showed growth in the past 5 quarters. So Moeller remains bullish. Texas officials say Meta has agreed to pay $1.4 billion in a settlement over claims that the tech giant used biometric data without permission. Of course, that doesn't surprise anyone. Japan will retain its basic approach on the yen, with intervention remaining an option to tackle excessively volatile moves in the exchange rate. The country's new top currency diplomat told Reuters Japan will act under internationally agreed commitments that exchange rates should be determined by markets, but that excessive volatility or disorderly movements can have an adverse impact on economic and financial stability. Now, if you'll remember last week, we saw massive drops in the Nikkei. That's Japan's stock exchange. So this really should come as no surprise. And last, oil retreated to a fresh 7-week low as the outlook for demand in China remained gloomy while traders looked ahead to key data points. West Texas Intermediate dropped below 75 a barrel and touched the lowest intraday price since June 6. Technical measures, including the relative strength index, are signaling that the sell-off may be overdone after trend-following algorithms exacerbated losses in recent sessions. When those algorithms kick in, man, it's like pushing over the dominoes. You've seen, of course, I'm sure, these competitions where people spend weeks getting all those dominoes lined up. But all it takes is a canary to sneeze, and it all comes down. Now, I think I got an update here, and I do. Valerie, thanks for sending that over. As usual, guys, I got her reformatted so it fits my screen. But it's worth it to give you the most current updated results. All right, let's see if that did the trick. Yep, it did. Okay, Logic 247. That's our 24/7 around-the-clock E-mini alert service. We had over 100 alerts last week. That was pretty sweet. We closed out the week with 15% being stopped out. We're now in week 313 of Logic 247. Now, it's not just E-minis, but also crude, gold, silver, euro, bonds. Over the last 313 weeks, we've issued over 17,400 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on market structure and a very simple process that I teach all of our passport holders in their one-on-one mentoring sessions. Now, today's only Tuesday, but since the market opened Sunday night at 6 p.m. Eastern, we've issued a total of 44 alerts, one never triggered. Still waiting on the outcome of 13. That gives us 30 actionable alerts, of which 5 or 17% would have been stopped out, again based on market structure and that very simple process that I teach all passport holders in their one-on-one mentoring sessions. The purpose of the Logic alerts is not so that you can just trade the alerts and not have to learn how to trade. The Logic alerts are designed to help you read the chart, the way we read the chart. Because only until you learn how to read the chart can we effectively teach you how to trade. So use the alerts as they're intended. For those of you that are possibly new, let's jump down here real quick and see what we're looking at. Now, every Logic alert comes with an entry price, an initial target designed to help you get your goal for the day, and then often additional targets, and of course a final trade to target. Last week we had 104 alerts and 15% were stopped out. Good week. We're now in week 313. First alert coming out of the gate Sunday night got stopped out, crude oil. It was a gap fill trade. Then we had, okay, this is alert number 17,377. See, when Valerie does the recap, it throws things off because our screens have a different resolution. But B means buy, T means initial target, PR means potential resistance, or that's your second target, and then the weekly trading zone above, that's your final trade to target. So obviously a red X means it got stopped out, and a thumbs up means it didn't. We had a hedge on the ES, another thumbs up. S means sell, T means initial target. Next target, potential support. Next target, potential support. All the way down. The weekly trading zone at 5400/5401. Now keep in mind on Sunday night, we're using the previous week zones because the new zones don't come out till Monday morning at 6:15 a.m. Eastern. So everything I'm showing you here happened Sunday night. There's a long on the Dow. This one hasn't triggered. This one hasn't triggered. A short on the Russell. Again, initial target. 2, 3, 4, 5, 6 targets, and then the final trade to target. So long on the NQ, short on the NQ, a long on crude that got stopped out, short on crude that didn't get stopped out, long on gold, short on gold, long on silver, no trigger, short on silver, short on gold, no trigger here yet, long on crude, short on crude, with there's that initial target that's designed to help you get your goal for the day. And what you do is if you're a crude trader, so when one of these alerts comes out, you immediately go to your 30-minute chart. You draw a line here, draw a horizontal line here, and here, and here, and here, and here, and here, and here. This teaches you how to find the windows of opportunity in the market. Nothing with this yet. Stop out on the NQ. Nothing with this yet. Short on the Dow. Stop out on the Russell. Stop out on the ES. Short on the ES. Short on the Dow. Short on the Russell. Short on the NQ. Nothing here yet. We have rolled to the Z contract now. Long on silver. Long on gold. Now we're into Tuesday. Short on the ES. Short on the NQ. And then these are all ones published today. Short on the ES, short on the NQ. And so now you know, if you didn't know, these are what the Logic 247 alerts look like. I don't go through the whole list every day, but you use these to learn how to read the chart. I teach you how to do that if you're a passport holder in your one-on-one mentoring sessions. Now, once you've learned to read the chart, you're able to find out how well you've learned to read it, and then you can tell me where you need help using the CTAs, the concierge trade alerts. Now, the logic alerts come out around the clock, 2 a.m. or 2 p.m. because futures trade around the clock and we have traders around the globe. Our day session is their night session and vice versa. But the CTAs are published as a static report every night shortly after the Globex open. So last night, 10 minutes after the open, all of our members and trial members had all of these targets. The first thing you do when the report comes out is go to the 30-minute chart of whatever markets you actually trade and make a note where price is at this time. It'll always be between these two numbers. Draw a line in the sand at the long target, a line in the sand at the short target. Those will serve as great visual cues to keep you on the right side of the street. Price gets above the 30-minute BBC, it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. BBC stands for bull, bear, cross. It's the green line you see on all my charts. If price gets above the green line, we're bullish and anticipate higher prices. If price gets below the green line, then we're bearish and anticipate lower prices. Now, all alerts are created on the 30-minute chart. Nothing magic about 30 minutes, just the time frame I chose years ago. It's not broke. Get alone. You can apply the BBC to a daily, a weekly, a monthly chart, a 5-minute chart, a tick chart, or a range chart. The concept is the same. Price gets above the green line, expect higher prices. Price gets below the green line, expect lower prices, always relative to whatever time frame you're applying it to. Now, this is where you learn whether or not you understood what I tried to teach you with Logic 247. And by now, you should know how price behaves at a weekly trading zone. That's important because price is always trying to reach a weekly trading zone. From the moment the markets open Sunday night until they close Friday afternoon, price is above the 30-minute BBC, it's trying to get to the zone overhead. If price is below the 30-minute BBC, it's trying to get to the weekly zone below. Publish the zones every week for our members since December 14th of 2009. So this December will make 15 years. They come out Monday morning at 6:15 a.m. Eastern. And once they're published Monday morning, they're carved in stone for the entire week. They do not change in any way whatsoever. Beyond that, just resist the urge to complicate things. Sometimes that's hard. As long as you know which way the wind is blowing, it's pretty simple to reach your goal today. Now, Michael should be here in about 10 minutes, so take a peek here at the daily chart. Now, this is the ES. Is there any question in your mind which way the wind is blowing? Now, at one point in the session, we had a little bit of a green candle. That's evaporated. And we're basically touching the 38% fib retracement. Now, the first time we dropped to the 24, we caught a bounce. Then we dropped to the 38% fib retracement, caught a bounce, came back to it, bounce, back to it. Is it going to give us a bounce this time? Or is it going to take us to this triple bottom down around 5,400? That could be good for a bounce. Then we have the 50% fib retracement at 5,370. Now, the purpose of a daily chart is to gather information. Institutional traders, because of their account size and the incredible size they trade in, they're the ones who actually move price. You and I, we just create liquidity. But if you'll learn to spend 2 minutes with the daily chart of whatever you trade, maybe it's not a futures market, maybe it's stocks, crypto, Forex, ETF. By spending 2 minutes with the daily chart, you're literally looking over the shoulder, the deep pockets that move price. Every institutional trader out there knows that we just hit a 38% fib retracement. Now, you can see we've got a little bounce there. Is it going to turn into a bounce? We bounced to red and falling. There was the potential when this was green for us to go up and tag the daily BBC. Suddenly the wind started to blow south. Now, we spiked the 38 and put in a low on July 25th at 54.32 half. So that's another area of potential support before we get to this triple bottom right here, which comes ahead of the 50% fib retracement. How we close today will speak volumes. Do we close below the 38? Do we close below this low? Close below this triple bottom. Now, anybody that tells you they know, well, they're funning you. Okay. No one, not man nor machine, knows what's going to happen next in the markets. However, with our strategy and our indicators, once you've learned how to read the chart and read the indicators, you will know with a great deal of certainty what the next high probability move is in any market. As I said, all alerts are created on the 30-minute chart. The vertical line separates today, Tuesday, from Monday. Back over here is Friday. Now remember, these zones that you're seeing now were published yesterday morning at 6:15 a.m. Eastern, and they're carved in stone for the entire week, no matter what happens. When price rallies up to a weekly zone, we expect resistance until proven otherwise. When price drops to a weekly zone, we expect support until proven otherwise. Price always reverts to the mean. In our case, the mean is green. We call it the BBC. When we're building legs to the upside, that's how price moves. Leg, retracement, leg, retracement, leg, retracement. You can see that the pullback holds more often than not. When we get below the BBC and find support at a zone, price reverts to the mean. And again, the pullback holds more often than not, even when we spike it. Notice these three candles, they're still touching the BBC, so yes, the pullback held. And we got a leg and a retracement, and that pullback held. And then a tiny leg and a retracement, pullback held. This was the opening candle last night. We're below the BBC, we have red and falling, and where do we go? Consolidate at the zone. We expect that to be support. Now this candle alone opened at 55.04 half, we'll just call it 504, and dropped to 54.92 half. So you open, so what are we talking, 12 points? There's 12 points in this candle. And you expect support right there. Consolidated. When price reaches a weekly trading zone, 70% of the time you'll get consolidation. 20% of the time you'll get rejection. This was a green candle all the way up to the zone, which is 55.32/33. So we spiked it by 1.5, okay? And then resistance always sends the market looking for support. Support sends us looking for resistance. Back to support. Back to resistance. Back to support. And what are we doing at the zone? Consolidate. 70% of the time. 10% of the time is the slice. That's when a 30-minute candle slices through a zone like it's not even there. Now, you could view this as a slice. When it ran out of steam, it came back to the zone it sliced through and continued in the direction of the slice. But really, this is part of the consolidation pattern. So I'll show you a cleaner look at some point of a slice. Trade every market exactly the same. On the broadcast yesterday, we drew in this window of opportunity right here. And last night, it filled beautifully for us. This was the opening candle. Down we came, filled the window. We did not make it to the short target, though. The support right here, right there, held the market up. Red and falling turn to blue and climbing. We get back above the BBC. We get a leg, retracement, a leg, retracement, and then a leg. It takes us up to and through the long target. And we put in a lower high. Okay, that's a sign of weakness. So prices come back to the BBC, and again, the pullback holds more often than not. So only natural the price would try to push its way back up to this potential resistance, this potential resistance, and this potential resistance. However, buyers will only keep buying for so long, and if they can't move the needle, they're going to hit the pause button. It takes financial commitment for price to rise, but all it takes for price to fall is for the institutional buyers to hit the pause button on the buy side. That's when institutions that specialize in short selling come out of the woodwork and take advantage of the fact that buyers have temporarily thrown in the towel. On the Russell, here's the open. We dropped to the short target where we found support based off the low of, now this is Tuesday, Monday, Friday. This is Thursday of last week. Look at the horizontal line on my cursor. This is what I mean about learning how to read a chart. Okay, you had to expect support at this area until proven otherwise. Support is going to send the market looking for resistance. We managed to trade through the BBC this time. Now the pullback holds more often than not, but eventually it has to trade through. Otherwise the markets would become untradeable. So we get above the BBC along with blue and climbing. We get a leg and a retracement, a leg and a retracement. Then we get a leg that takes us all the way up to the zone. But we couldn't make it to the target, which was based off yesterday's bearish cross. That's an incredible sign of weakness. And so now, support sent us to resistance, resistance sent us to support, support has now sent us to resistance. It's the way it happens, day after day after day. Here's the open last night on the NQ. We're below the BBC. We have red and falling. Down we go to the zone. Okay. Those lows are based off Friday's low, right here. Not the low of the session, but these lows put in towards the end of the session. Remember, the vertical line separates the days. So we come down, we hit the short target, support, get through the BBC, we make a run all the way up to the zone overhead, 19,298/99. We did not make it all the way to the long target. In other words, we had a high, a lower high, and a lower high. That's a sign of weakness. So price gets below the BBC. This 30-minute candle sliced through the zone like it wasn't even there. And then when it ran out of steam, it retraced back to the zone. And you can see where we are now, sitting on the zone at 83/80. Tuesday, Monday, Friday. We just took out the low of last Thursday. Okay. All right. We'll leave it at that. We'll pick up with crude oil when I come back. Michael is here. He's going to give us a recap of everything that happened this morning in the live training room. Then we'll trade live on the TradingView platform for 30 minutes. I'll come back, finish the recap, and close out with our good word for the day.
All right. Should be seeing my stuff.
Your stuff looks good.
Excellent. Here we go then. Good afternoon, everyone. Today is Tuesday, the 30th day of July, 2024. 1 day left of the month of July. That means 1 day left of 19 contracts in the 24/20 blueprint. If you have not taken a free trial with us and you want to go here to mytradingiq.com, click on the purple button right here. You click on that purple button. There is no credit card required for this trial. All right, click on that purple button, and it will bring you to this registration page right here. All right. On this page, all that we ask for is your name, your email, and your phone number. And there are 5 multiple choice questions. Down here, give us your administrator machine ID or your TradingView login ID. Either one is good. Both, if you have them both. If you just have a Ninja, you might want to check out, go to trading platforms on the website and check out the TradingView platform anyway. They offer a 30-day free trial. If you're going to take the 30-day free trial, you want to make sure you sign up for the data. The data is like $7 a month. You want to get the data for the futures. All right. That is not free. You get delayed data free, but you don't get real-time data free. Okay. Okay. Now we had a good day today, right? Getting the goal and all that. We got the goal in 3 minutes. The first trade got to $1,900. So we took a total of 14 trades. But the numbers got a little smaller because I started the lesson plan. I really got into a lot of detail in today's lesson plan. We won't rename that when I think about it. What did I go over the most in today's lesson plan? Think about that. So I'll do that later. Anyway, as I said, today is the 30th day of July, 2024. We made 22 ticks on the Russell and 3 ticks on the YM. Put us at 125 in the morning session. Took 3 minutes in one trade to get to $100 a contract. That was the very first trade. I put a target up there at $100 a contract, and it nailed it. And then it slammed right back down, which is what I was afraid it was going to do. I'll go over that in just a minute. I'll go over all the trades in just a minute. But we took a total of 14 trades this morning. So on the month now, we're at $10,110 over 20 business days, averaging $505 per contract per 2-hour business day. On the year, we're now at $57,195 over 140 business days, averaging $408 per contract per 2-hour business day. Now, if you were to do the 24/20 blueprint, you would be at 7 contracts right now, starting with 1 in January, adding 1 per month. You'd be at 7 now. And you would have had to work 46.23 hours, quitting when you get the goal for the day. If you did it just like me, quitting when you get the goal for the day, you'd be averaging $1,644 an hour, starting this year with 1 contract and working your way up. Now, that makes me wonder what it looked like last year after 7 months. I kind of want to go see where were we after 7 months last year. Here we are, at the end of 6 months. Here we are at the end of 7 months. It doesn't give me any information here, but if I go to the end of the year, let's say after 7 months, the end of July, a total of 40,120. Oh no, that's where we were on the room. No, after 7 months, I have to go through and get this data. I'll do it for tomorrow, because I'm interested now where we stand compared to last year, year over year, starting out with 1 contract, working our way through. It looks like we had last year, and this is significant, really, the amount of time here in these first 7 months is significantly less than the amount of time it took this year. And that's because I'm actually trading, a dozen more contracts than I was back then. So it does take longer for me to get the goal. So these times for a single contract would be much less, and the average hourly rate would actually be more if I were doing it with fewer contracts. Anyway, I said all that to say this. Take the free trial. Go out to mytradingiq.com and sign up for the trial right there. Get vaccinated. Just kidding. All right. So here we are. Let's jump into the trades that we did take. All right. On the Russell, we had a little bit on everything that I'm showing right here. We didn't trade the NQ at all today. All right. But let's go back to the beginning here on the Russell. On the YM. Sorry, on the YM. Usually goes a lot faster than this. Why is not going as fast as it normally does? All right, well, I think it's going to be faster to slide it over. Usually goes really fast. I don't know what happened with that. But I'm not going to do the NQ, so I'll be able to do the other ones pretty quickly. All right, so our first trade in here on the YM was a break-even trade right in there. All right, our next trade on the YM was not for a little while. Right here on the YM. Wait, this is the YM, right? Yeah, somewhere in there we stopped out on the YM. I don't know where it is, but somewhere in there we stopped out. We had a break-even to stop out. I don't know where the stop out is, but it was before here. We had a break even, and then we had to stop out, and then we picked up on the stop out. We actually lost 11 ticks, and then here we picked up 12 ticks, got us to +1, and then we had 2 ticks there to get us to +3. We had a break even there, and I believe that's where we stopped trading it, because the lesson plan ran right through the end of the session. I don't think I placed it on the trade. I didn't. Okay, so if you go through and you look at the blue arrows, there was one there that was okay, one there that was good, one there that was good. So we had a few blue arrows that were okay with the YM. And this one right here is still working. This, well, just barely put in a lower swing right there. So you can consider taking something else with that. Now the Russell, we'll see if the Russell's flows back properly. There it goes. Okay, so the Russell's flowing back. All right, so we'll go back to the beginning on this one. And there we are. This was our first trade of the morning right here. We went long. We actually went long in the pre-market, and it took it a few minutes, but then the markets opened up, and when they opened up, it shot right up. I had a 20-tick target on it, nailed my 20-tick target, and then it came right back down, like a second later. Look, this was 9:30:01 where it hit my target. It's 9:30:02 and 9:30:03. 3 seconds later, it came right back down. That is why I did it the way I did. You know, normally I would, in the DOM, the way I would normally do it is if I got into a trade and I was in a trade, I'd put my target up there. I'd have my original target, which would be way up here somewhere. And then I'd put another target in where I wanted to hit the 20 ticks instead of dragging that one down. But this morning I dragged that one down and put it at 20 ticks because I had a feeling if it went up there, it would hit that target, which would be a second entry, and then it might go right through and hit my other target, which in this case would have worked out fine because that would have made me short, and then it slammed right back down. But I was afraid it was going to go right through it and hit that other target, which it would have done. But it all worked out. I got 20 ticks out of the whole thing, and I didn't get any extra trades in there. That's where we got the goal for the day. On that one, we ended up with break even. And moving further to the right, we got into the lesson plan. Another break even right there. Then we got into the lesson plan, and we're looking for prices to get to these different levels based upon the price action. And this was a lot of talk in the lesson plan about the diamond principle, and about where price should go based upon what price is done. We're doing it bar by bar by bar through here. I thought it was a pretty good plan. We did eventually get down to this level, and I don't know if we're going to get back up to that other level, but you see there are no arrows in here because I don't have them turned on. I forgot I shut all that off. Hang on, let's put the arrows on here, and we'll put the bands on. All right, that was all part of the lesson plan this morning. And then no trades. There we go. All right, so now we're back to having arrows and all that stuff. So we didn't take any more trades. You know, we ended up with plus 22. So we had plus 20, no, plus 20 on the very first trade, and then we had a plus 2 somewhere. We ended up with plus 22 on the Russell. So that very first trade, I had my target up at plus 20, got the goal for the day, and then we got 2 more somewhere else. But you see all the blue arrows in here, and I actually have it so that the opacity, how do you say that? Is it opacity or opacity? I think it's opacity. You'd have to have a vowel at the end to make it a long A. Anyway. Yeah. Okay, and we had some blue arrows in here. This was during the break. Had a couple blue arrows in there, blue arrow there. None of them would have stopped out at this point, right? And that brings us current, right? And this, I'm going to get rid of that thing. All right. So the ES now we had a few trades on the ES today. Stop out, and the stop out was an 8-tick stop out. But we'll get to that in just a minute here. Okay, I believe these are all the trades on the ES right here. We had that one right there. We picked up 4 ticks, then we had a break even, then we picked up another 4, and then we stopped out. So +4, break even, plus another 4 to get us to 8, and then a stop out, -8, got us down to break even. And then we got into the lesson plan. All right, and during the lesson plan, wow, that was a big move down right there. What was that? I don't know. I do not know. Sliding sideways. We don't have, well, in the break here, we didn't have any blue arrows there during the break. We had this one right here at the beginning of the break, and that was it. This one at the end of the morning session, and this one blue arrow right here. So it was a really congested day today. We did have some news events that came out, high impact news events. I didn't really go and look at the news. I think the consumer confidence came out better than anticipated, which, I mean, for anybody that's hoping we get rid of this administration, that is better than anticipated. I mean, consumer confidence would be a good thing. Joel's job openings greater than anticipated. I don't really believe that. Joel's job quits. Greater than anticipated. No, less than anticipated. Why is that red that it's less than anticipated? I don't know. Tomorrow we have more high impact stuff going out tomorrow, guys, in the pre-market. This is usually high impact stuff. There's usually high impact stuff coming out. We have Chicago PMI. That's usually high impact. At 8:15, it's not at 8:30. It's at 8:15. We have the ADP employment change, right? The crude inventory is at 10:30. We have FOMC tomorrow. I did not realize that. Fed interest rate decision. I did not realize that. We got that coming up tomorrow. Challenger job cuts and all that stuff coming up on Thursday. And ISM manufacturing and non-farm payrolls and employment rate and all that stuff coming up on Friday. So we have a lot of high impact news coming out the rest of the week, guys. Really high impact news coming out the rest of the week. Should make for some good trading. All right, and that's what we're going to do now. I'm just going to jump into the trading. I didn't look at the NQ. I mean, I can look at the NQ with you right now, but what I looked at this morning, I'm going to look at the same way I did yesterday. When I looked at the NQ with you guys yesterday, I looked at it on a 31 range like this because it gets rid of the noise. And, you know, the volatility that we have in the NQ, it's just kind of crazy to think of trading it. Well, with the multiple contracts. With one contract, you can trade it, but it's got so much volatility, you can't do it on a small time frame. Even 15 range is kind of small. But just like yesterday, if you were to take shorts in here where it comes out of the overbought when the ribbon is spread, bing, right there. Bing, right there. Bing, right there. The ribbon is not spread in here. It still worked out, but the ribbon is not spread. The ribbon is spread the other way. So you're taking a long right here. Okay, going long on that right there. And that was from like right down here at 37.25. So from 37.25, it's already run up to 44. So we'll just say 38 up to 44. It's already run 6 points at 24 ticks. Enough to get you stopped to break even, very minimum. And a couple more, there's enough to get the goal for the day right there. That's enough to get the goal for the day. Any one of these trades that I just showed you right here was enough to get the goal for the day. All right, so with the MNQ, of course, you know, the liquidity is better with the MNQ. Like you're not going to see anything over 100 right now with the NQ, but with the MNQ, you are seeing things over 100. If I bring up the regular NQ, let me find it. Hang on, let me find it. I had minimized this because it was distracting me. Here it is. right? You're not seeing anything near 100 right now on these. Nothing near 100. The market is trading so thin. It's unusual. But you could trade, it takes 10 micros to equal one regular contract. And the commission is about the same. If you work it out, it works out to be pretty close to the same. But if the risk is too much for a 30 tick, for a 31 tick range like this, your stop would have to be 35 to 40 ticks, something like that. If that's too much for you to put on with $5 a contract, you can put it on with 5 minis and it'd be $250 a contract, is what it would be. $250 a tick, $250 a tick with 5 minis. Okay, and right there, you would have just nailed the goal for the day. Bing, just like that. Again, from back here, it would have hit it. And this turned up right here with the trend. There's so much to be done. So much to be done. Coming to a desktop near you in the future. I'm going to bring up the question box in case there were any questions. See one. Chris says yes, but I don't know what you say yes to. Okay, so over here right now on the YM, that is a blue purple arrow long trade over there. I just grabbed that one. Here it is. Stop going to break even on that. Stop to +2. Where should that go? Right here is where it should go. Okay, and be 15 ticks. Oh, it almost had it. Stop to +5, and we're out with 5. It's going to go up there. That was 810. 810 is what it's going to go up to. It didn't give a higher swing, so you can't get it on the pullback right here, but we just grabbed 5 off of that. Now, going back here to the micros, trying to move this around so I can see a little bit better. Here on the micros, there is another bounce out of the oversold right there. And I don't like the way that this is working right here because it does not show my stop in here. What the heck just happened with that? I can't tell. All right. Well, anyway, what I was looking for here was an opportunity, but I guess, you know what? I guess I didn't have that on. Something's not working right with that micro dom. But there was another one right there where it just ran up right here. It didn't pull out of the oversold, but it gave you an up close right in here. The blue arrow over here on the Russell is an opportunity. That's already gone too far into profit to take anything there now. Okay. That was also one of these. All right, so looking for more opportunities. What time is it? It's 1:12, so we have 18 minutes left in this session, guys. And Matt, I don't know if you're out there right now. Matt, we'll send you a link to that meeting. And that will be coming up 2 o'clock. All right, and so we didn't put in a higher swing from the blue arrow here. We are pulling back down to test the ribbon here on the ES. Now, let me go and get a MNQ DOM here. Do this. Click on that and do MNQ. See, that green arrow right there would have been a nice trade too. I wasn't really looking at it. Otherwise, I'd have probably taken that too. But let me bring up an MNQ DOM. Here it is. Now let's set up the stop on this. Okay, I don't have a bracket set up for this because by default my bracket's set up for. Seems like yes. We have factor in ticks, so the stop is going to be we'll say 35. Right, stop's gonna be 35. My target, make that 50. Right. Target at 50. 35 by 50. That seems like a reasonable expectation. I'll do 19 because that's what I'm at right now. And we'll see how it works out. All right, if we get another trade over there, I'll take it over there. Let's make this the actual MQ though. Okay, MNQ. It should run about the same. You don't have to change anything. And so here we are. The Russell put in a nice higher swing there. We don't have anything on the line, but the Russell put in a nice higher swing. And we want that to pull back and give us something over here on the ES. We want that to pull back and give us something in here on the MNQ. It'd be great if that pulled back too. Great if that pulled back too. Now, let me just make sure my stop's working. Yeah, my stop seems to be in the right place. I can't tell if the target's going to be its way out of view. But did you see that right here? Coupled with the green arrow pulling out of the oversold. Bang. All right. We, over here on the YM, we need to put in a lower swing. We did not yet. We're, outer band's completely flat. So you got to put in a lower swing and back to spread out those outer bands a little bit. All right, it's in a no trade zone. It's right in the middle of a no trade zone, so you can't really do anything with that right now. There's something over here, and I wanted to see. Nothing for me to look at. Okay. All right, so we had a big run up right here, and we need that to pull back. Over here, same thing, big run up, and we need that to pull back. The outer bands are completely flat here, so we don't have a thing we can do. All right. All right, so we're waiting for pullbacks. While we wait for pullbacks, if you have not taken a free trial with us, go here to mytradingiq.com, sign up for the free trial right here. Click on the purple button. There is no credit card required for the trial. Sign up right there. Also, if you want to go to a webinar that I'm going to host tomorrow, we'll go ahead and target view trades, and you can sign up for the webinar. It's at 3 p.m. tomorrow afternoon. Right here. A range sniper. Okay. It's going to be manifested differently with TV trades. You're not going to see it at the bottom of the chart. Right? TV trades doesn't have any indicators, but you see your eyeballs. It just gives you indications. Like this one right here would just give me a long. If I were paying attention to it, it would just give me a long. And if I had the TV trades on, it would have plopped an arrow right there, saying long trade right there. Okay. If I were paying attention. All right, so over here right now, we need to bounce off the ribbon to get a trade here. We didn't get into the oversold and we didn't touch the ribbon, so there's no trade here on the ES. Over here on the Russell, we did give a pullback and we did test the ribbon. We didn't come out of the oversold, so it's just a ribbon trade there on the Russell right now. Okay, it's just a plain ribbon trade on the Russell. And it's already gone too far into profit to jump in the trade now. Nothing over here on the YM. Okay, the ES is pulling back now. It's oversold and it's about to hit the ribbon. So what it looks like the ES is trying to do, and the NQ, they both look like they're trying to go back up to the weekly trading zone. All right, that's what they both look like they're trying to do right here. The Russell doesn't look like it's doing anything. If I had the no trade zones on, there it is, I do. Okay, so it's gone right into a no trade zone, so was the YM. So we need the up close on both of these now, on the NQ and on the ES. On the ES, it's got to pull it out of the oversold because it's hit the black line on the pullback. The NQ has not hit the black line on the pullback, so it does not have to pull it out of the oversold to have a trade. Just need the up close. It does not need to pull it out of the oversold. Okay. There's the blue arrow long, and that also pulled it onto the oversold, so it's got everything going for it, and so does the ES right there. Oop, trying to slide this over. Okay, so here's the ES, and here's the MNQ. All right, so the ES is going to break even, and the MNQ, and give that a little room to breathe. That should make it right up to the weekly trading zone there. That's enough room to breathe. So we have a profit in both of these right now. And by canceling those, I got rid of the targets. So I'm just going to have to exit with a trailing stop on both of these right now. I'm expecting this to go all the way up here to 890. Okay, and there it goes. So I'm going to lock in some on that. 890 is what I'm thinking on that. Over here, I'm going to lock in 4 on that. And here comes 890. All right, I'm going to lock in a lot more on that. That was from 74.25, so we'll bring it up to a 25 number. There it is. And 83.25, 84.25, and locking in more over here on the ES too. 8 ticks on the ES, and 86.25, 89.25. It's going to put it at 93.25. There it is, 93.25. All right, and over here the ES is killing it too. I'm going to lock in another 0.25 also, so we're at 56.25. So we're killing it on both of these trades. And done. Both of those trades. Ooh, that was a chunk of money right there. I don't usually talk about it in money, in dollars and cents, but that was. Very nice trades on both of them. Both right off the ribbon. All right, both beautiful trades off the ribbon. That one was a green arrow, and this one over here was a blue arrow. The NQ, I don't remember exactly how much we got out of the NQ. Let me go and tell you. I want to say it was like 40 points or 30 points or something like that. Let me go up to the top and see. Let me go down to the bottom and see. Here we go. Okay, so the NQ, we got long. And I'm not exactly sure that's right. NQ, sell by 74. Was it 74 we were long at? Yeah, that's about right. Okay, that's right. So we go long at 74 and we get out at we got long at 874 and went out at 893.25 is what it said it gave us. Thought it was higher than that, but I guess 893.25. So that was 20 something points, right? Or 19 points, 19 times 4, whatever that is. There's a lot of ticks, right? And on the ES, we got long at 52.37 is what we averaged in at, and we got out at 56.01 is what we averaged out at. So with the NQ, we averaged in at 74.16, 874.16, and we averaged out at 893.25. It's pretty good money right there. Big trades. Doesn't give me the actual dollar amount right there, but oh well. Either way, nice trades. I don't see any questions about anything, so I'm just assuming you guys are comfortable with everything that you know right now about what's going on in here. This was another pull from the oversold right here. All right, another pull from the oversold. And it's gone enough to bump the stop to break even if you want to. It's already done that. We're not going to have another one over here because we're going to be right inside the weekly trading zone, so we're not going to have anything there. Right.
Get a chance, take a look at MetaPlanet.
MetaPlanet. Okay, I think I had that running over here just a minute ago, just a while ago anyway. Over here.
Up 65% on the day.
And what was the symbol for that?
Just type in MetaPlanet, I forget.
That's right. It was a number, wasn't it? Yeah, it was number 3350. This is it. All right. The 7 range is not the place to type that.
I'd look at the daily.
Yeah, 30-minute or daily. Yeah, here it is.
Here's the gap.
Yep, here's a huge gap up right here. This is today's gap. Yeah, that's right. It only runs a little bit. So here's today's gap. Gap from where?
Got about from where the red arrow is pointing down.
Yeah, from over here. But that's the 26th. That was last week.
That's what I was saying. Throw it on a daily and get an idea.
Oh yeah, that's right. That's right. On the daily. That's right. Yeah, this is a 30-minute. Daily. Here it is. Okay. So on the daily, today is 30th of July, so the open was right here. Looks like a gap down. I mean, it's up a lot since the 11th of July, but it looks like it's got a gap down right here.
Just in, Metaplanet Incorporated stock surges 650% on the day. So, trying to see what symbol they're using.
Yeah.
If you look in the Breeze channel, you can see the chart.
Okay, let me go out there. Hang on a sec.
It's the last post.
Yep. Here it is. Metaplanet Inc. TSC. It's showing it at 1510, so it's at 1510 right here. This is on a 1 hour. It's on an hourly chart. Okay, that's what that's showing. And I don't. It's not. This mustn't be updated. That's probably what. Yeah, it's delayed. This is delayed data. So if you have delayed data,
try
chart,
the OTC over-the-counter stock and see what you get. Type in Metaplanet again and choose the other option. See the OTC? Yeah, over the counter.
Yep.
No data.
No data here.
All right.
Yeah.
Anyway.
Yeah, the problem is that it's delayed, but I believe you. Here it is, right here, the symbol.
Yeah.
What you were talking about. It went from 200 up to 1500. Wow. That is a lot.
I don't know why the charts differ, but that chart comes from a pretty reliable source, so I don't know.
Yeah, I think this one, because the data is delayed, it's not giving you what you're looking for. Because the data is delayed. It shows it going up to here. It shows it at 1500, the 1510, but it doesn't show anything.
That chart was posted 3 minutes ago, so.
Okay, well, let's go to a minute chart.
So, but if you're on delayed data, you're probably delayed by 20 minutes.
Well, the delayed data shows it right here. On a minute chart, it shows it from right here. This is today. This is today at 2 o'clock when it opens. That's right. It opens up at 2 o'clock, right? And that's.
I honestly don't know.
0200. 2030. No, it opens up at 2030. All right. Well, whatever. It shows it right here. It went from right here all the way down here at 196, all the way up to here. It had a blue arrow. But yeah, it shows it here on the minute chart. This is delayed data too, but it's at least showing the gap, that huge gap up right there.
Gotcha. Okay.
It's good stuff. Good stuff. I'll back in here and see if we got anything else worth looking at. So, you guys are probably wondering if this works the same way with the smaller time frames, and the answer is yes, it does. It does, indeed. I'm still working on it. I'm still working on things with it, but I have given more signals and less signals, and there's aggressive ways to use it and non-aggressive ways to use it. It's just a whole bunch of things that I'm working with. But I'm figuring September, Labor Day. I'm making a goal for that. All right. So what time is it? It's 1:28. So I have a couple of minutes left in here. We're not going to have a trade here on the ES because we're in a no trade zone. We might get something here on the Russell. We might get something here on the YM. But we're not going to have anything over here on the MNQ either. We did have a couple of nice trades in here from this, but when the ribbon gets all crunched up, no more trading. Ribbon spread, you can take those bounces. Ribbon's not spread, No more trade. Okay. Pretty good stuff. On the YM, we want that to pull back up and test the ribbon here. We got a black arrow, but because we have a trend change right here, it's going up before this, and now it's going down. Because that trend change, we want to pull back up and test the ribbon. On the Russell, we want that to pull back up and test the ribbon there too. All right, and that's where things stand right now. Dwayne, you don't have any meetings scheduled for this afternoon, do you? Oh, never mind. You're still going to be in this meeting when that meeting starts. Doesn't matter. All right. It's okay. It doesn't matter. I was thinking I would use GoToWebinar, but you're still going to be in this meeting when my next meeting starts, because the GoToMeeting is different than it used to be. But it's okay. I can make it work. I can use my own. It'll be fine.
They did a 10-to-1 stock split, a reverse stock split, which makes each share 10 times more valuable.
That explains it.
That's usually the beginning of a death spiral. I don't like reverse stock splits.
That's usually the end of it. That's usually the end of it right there. You do reverse stock splits, and then people that benefit are the people that own the millions of shares to begin with, and then they bail out. That's what happens. All right, so on the YM right now, guys, it's got a green arrow short right in there. Add a green arrow short right in here from 809. 809, it's already gone 10 ticks into profit. I didn't get it, but if you did get it, you stopped to go to break even, I'd be expecting it to get down to this level down here. I'd have taken some profit on that if I'd have gotten it. I didn't. Might be one over here. Nope, we're not going to get a trade here. It's hit the black line. It's not oversold, so you're not going to have a trade there. Okay. And nothing. Just in the weekly trading zone over here. Oh wow, it's 1:31. I didn't know this. I got a meeting coming up too. All right, well that's it, guys. Let me show you how to take the free trial. You go here to mytradingiq.com, click on the purple button. There's no credit card required for the trial. When you click on that, you'll be brought to the registration page. Just fill it out. First name, last name, email, phone number. A couple of multiple choice questions, and give us your machine ID if you have one, or your login ID if you have one. All right, give us that information, and we'll be able to activate your indicators for you. So you have your indicators indicating on your accounts, and you're ready to go. All right, and with that, you can pass it back out to fabulous Phoenix, Arizona, Studio A. Well, look, in South Mountain, America's largest city park. If you're ready, Dwayne. Sounds like you were fumbling around with your microphone.
Yep, I dropped it.
Okay.
Okay, recap of the morning session.
Today, 3 minutes and one trade to $1,900.
Good job.
Thank you. Thank you.
Hey guys, for any of you who tuned in late, shame on you. We're in week 313 of Logic 247, and since the markets opened Sunday night, we've already issued 44 alerts, of which 5 or 17% would have been stopped out. Based on market structure and that simple process that we teach all of our passport holders in their one-on-one mentoring sessions. Over the last 313 weeks, we've issued over 17,400 individual alerts, and we've averaged on a weekly basis 20% or less being stopped out, again based on market structure and that simple three-step process we teach all passport holders. Now let's pick up where we left off. We had made it all the way to crude, and we opened below the BBC. Consolidation at the zone 70% of the time, and then a quick drop to the short target. Support will always send the market looking for resistance. You'll notice that today's resistance came right off these highs from yesterday. This is Tuesday, this is Monday, way back over here is Friday, back over here is Thursday. These zones only became valid at 6:15 a.m. yesterday morning. That's when the weekly trading zones were issued. Price rallies up to a zone, we expect resistance till proven otherwise. And when we drop to a zone, we expect support till proven otherwise. Support always sends the market to resistance, then resistance sends it looking for support, which it's momentarily found at the step line. Notice that red and falling has curled up and become blue and climbing. So on this pullback to the BBC, the pullback holds more often than not. When you've got blue and climbing chasing it up, it will often trade. We're on the December contract in gold. Here's where we opened last night, came down to the zone, consolidated, came within, what was the low? Came within a half a point of touching the short target, and that support took us back above the BBC. There's the bullish cross, and we ran right to the target. Resistance based off the bearish cross from yesterday. Resistance sends us to support, sends us to resistance at the zone, but sends us back to support. Now notice, why did price stop falling here? The bullish cross earlier in the session. Whenever you have a bullish cross that leads to an extended move, the first time price revisits that area will almost always be the support. And the same is true of a bearish cross. First time price revisits that area will almost always be good resistance, and it was. Okay. We've now hit 24.56. We spiked that zone a little bit. Now the step line is pointing straight up, so is blue and climbing, and the BBC, so you got the perfect stack. So I'm not ready to call a retracement all the way back to the BBC yet, but this was a pretty strong move. We went from 24.30 to 24.56. That's $2,600 per contract traded. So a retracement back into this high right here, that's where I'd look for the market to go, and then another run potentially at that zone overhead, one we already spiked. Potential support 24.49. Let price get there, firm up, and then if the next candle coming out of the gate is green, and there's 24 minutes left in the life of this candle, so when you're trading bigger picture, you got to develop patience and self-discipline. Now, also for those who may have tuned in late, the concierge trade alerts, which we're looking at right now, and we went through all of the logic alerts one by one earlier in the broadcast, so if you missed it, you can always watch it at youtube.com/CFRN. All of our members and trial members had all of these targets last night, 10 minutes after the market opened. Here's where we opened with silver, and it attempted the zone, couldn't quite get there, folded, got below the BBC, and then we made a beeline to the target and the zone. Remember, when price rallies up to a zone, we expect resistance. When it drops to a zone, support. Just like we saw yesterday. From support, consolidation, resistance, back to support, back to resistance, more consolidation, pull back to the BBC, and then a leg, and then a deep retracement all the way back to the short target, up to the zone, back to the zone, BBC, that's support times 2, and that's what's launched this move in silver. It's a pretty strong move for silver. When the price of silver moves $1, That's worth $5,000 per contract traded. So from this zone at 27.76, get to 28.76, and I'm not forecasting that we will. That would be a $5,000 per contract. Those are difficult trades to take because look what happened in the middle of your trade. Pulled all the way back here. So you've got all this profit, and then it evaporates, and then you got all this profit, and then it evaporates. So really have to make a decision what kind of trader you want to be. Okay, the mechanical model that you're taught in the live training room, that will serve you perfectly well. Okay, in fact, I won't even start teaching you any discretionary trading till you master the mechanical model as it's taught in the live training room. It's because what I say won't make sense unless you first understand the mechanical model. And the last market we're going to look at is the euro. We opened, dropped to this low from yesterday, support, got above the BBC, the pullback held, we ran to the zone, and we consolidated. Got back below the BBC, dropped to the target, support, yesterday's low. Consolidated, we've now pulled up to the BBC. And notice that red and falling. See, on the way down, you had the perfect stack. Price, step line, red and falling, BBC. Now, price, if price closes above the BBC, be very cognizant. This bearish cross right here, that's most likely going to be resistance first time up. Is that 100% of the time? No. Very few things are 100% of the time in the markets. More often than not, absolutely. The fact that we got blue and climbing, chasing price, I would anticipate price at least reaching this level. And if it can get through it, maybe on the second attempt, got potential resistance there, there, and then you're at the zone where we had the high of the day. One last look at the daily chart. Okay, remember we said earlier, 38% fib. First time we hit it, got a nice bounce. We hit it again today. We've gotten a bounce. But what's really important is where we close. We close below the low of July 25th. Then you got to look at this triple bottom here as potential support. And if we get through that, the 50% fib retracement should give us a very nice bounce, possibly all the way back to the daily BBC. Every institutional trader is looking at a daily chart and know we're at a 38% fib retracement. So are fibs real, or is it just some kind of self-fulfilling prophecy because everybody believes it's going to happen? Well, I'll let you do your own research, but fibs are very real. Okay, the golden ratio. It's in our DNA. It's in a flower. It's in a pretty woman's face. In fact, I encourage you, Google fib face and find out what happens when people with perfectly symmetrical faces look down into a crib at a baby, and when someone with a very unsymmetrical face looks down at the same baby. One gets you a coo, the other gets you a cry. To become a member, go to mytradingiq.com. If you have questions, call us 949-42-EMINI. You can always email us support@cfrn.net. In 2006, Futures Magazine published an article that 9 out of 10 new traders fail. They didn't offer any explanation why. They just gave the statistics. So I went on my own journey because that's almost unbelievable. They say it's gotten worse now, but I wanted to know why, and I found out. People were trying to trade without the benefit of a teacher to teach them how to trade. No matter what career path you choose, be a welder, banker, a baker, candlestick maker, you need somebody to teach you how to do the job. That's why we have 2 hours of live training in an interactive environment every trading day. And as a passport holder, you get one-on-one private mentoring at no extra charge. The strategy you learn, the indicators you own as a passport holder, are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETFs, doesn't matter. Price flows the same across all markets and all time frames. Support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. As a passport holder, you'll get the Logic 247 alerts around the clock. Get the concierge trade alerts every evening when they're published. Get the weekly trading zones Monday morning at 6:15 a.m. Eastern. And you'll be able to attend the members-only workshop on Thursday night. Also, as a passport holder, you'll get the golden key that unlocks all of our private channels in Telegram. And we do archive each and every members-only workshop. So if you wanted to, you could watch years of members-only workshops. Do you need to? Not really. Once you become a passport holder, just show up Thursday night at 8 p.m. Eastern and ask questions. Nobody sees what you type. Me, Michael, Valerie. And we're not there to judge you. We're there to help you. But if you don't ask questions, then we can't help you. So don't wander around lost. Don't be ashamed to ask a basic, simple question. Okay? Everything a trader needs, all under one roof, one low price. Now, the passport holders discussion group, it's a value-added service. You can't buy it. When you become a passport holder, they allow you access to it. Okay? And when you're on your free trial, that's where you're at in your journey. Make sure you get Telegram installed so that you can mix and mingle with our current traders and talk to them about their journey. You'll find that it's family friendly, that it's encouraging, will help you tremendously, and you'll have around the clock support. MyTradingIQ.com. Let's wrap it up with our good word for the day. Yesterday, we talked about having a nighttime experience. Today, a heart filled with goodness. Luke 6:45. Good man brings good things out of the good stored up in his heart. Where does goodness come from, and how can you cultivate more of it in your daily decisions and actions? Some people think goodness is a matter of the head, and that right thinking results in right living. Today, every politician gives the impression that education is the panacea for practically every problem in society. Yet education out of the head, without the same emphasis on the integrity of the heart, will produce only clever fiends. I didn't say friends, I said fiends. If education alone were the answer, white-collar crimes would likely drop. Others think goodness is a matter of the hands. They say goodness means treating people well. But doing good does not make a person good. Murderers on death row may be good to their mothers, but they're maybe not good individuals. Truth is, goodness is not located in the head or the hands. It's hidden in your heart. Jesus, the best man who ever lived, said, "Good man brings good things out of the good stored up in his heart." Goodness is not merely a matter of what we know or what we do. It is a matter of what we are. As you consider the life ahead of you, what really matters is not how long you live, but how well you live. Sir Francis Bacon once said, "Of all virtues and dignities of the mind, goodness is the greatest, being the character of deity. And without it, man is a busy, mischievous, wretched thing." So in your desire to be good, draw closer to God. After all, we become like the company we keep. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue richly bless you with His mercy, with His grace, and I'll see you at the bell. Bell, bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.